All right, we're going to go ahead and get started. So, hello everyone. My name is Tiffany Garcia, and I'm a librarian at the San Jose Public Library. Today we have Jennipher Lommen, a certified financial planner and enrolled agent, to teach us some tax time tips. She will cover how to get organized for tax season, share some important deadlines, and some major tax law changes for 2020, things to be aware of. Jennipher offers educational programs as part of Financial Planning Association Silicon Valley Pro-Bono Committee. Jennipher will take questions after the main portion of the program is over. She will do her best to answer your general questions. Without further ado, I'm going to pass on the mic to Jennipher.
Hi there. Thank you, Tiffany. Yeah, it's nice to be here. I am part of the Financial Planning Association of Silicon Valley. There are Financial Planning Association chapters all over California and all over the United States. And each chapter has its own subcommittees, and one of those is a pro bono committee. So I'm part of a group of people who are committed to providing financial education and support to members of our community and people who might not otherwise be able to afford it, but also to just anybody who is interested in learning for their own purposes. So that is the group that is helping to support me in this work that I'm sharing with you. So I will go ahead and share my screen and offer this bit of a slideshow to you and talk a little bit to it. And hopefully we'll have plenty of time for questions. And without further ado, let's see if I can do this. All right. Tiffany, you want to verify that you can see my screen? It's not on slide one. Let's get it.
Okay. There we go. Now it's on slide one. Yes, I see it. Thank you.
All right. Okay, so tax time tips. Here's my information. There's a little bit about, there's some, the Planner Search for Financial Planning Association website across the bottom. That is where you could go if you were actually looking for a financial planner of your own. This is a disclaimer that we have done everything we possibly can to make sure that the information in this presentation is accurate and correct and up to date. But we aren't making any total guarantees, and you are not supposed to be taking this as investment or tax or financial advice directly. If you've got follow-up questions, we definitely want you to seek additional support for that. All right, so these are the main headlines, as Tiffany mentioned. We're going to talk about how to get organized for your taxes, some important deadlines, and some recent tax law changes before we move to your questions. In terms of getting organized, what I always do when I am sitting down and looking to begin a client's tax return is I look at the prior year. So if you are getting ready to do your own 2020 tax return, or if you are going to be bringing your information to someone to help you prepare it, the quickest thing that you can do is take a look at the prior year. And that should jog your memory as far as the kinds of income and the kinds of deductions that you encountered in the year before. And as a result of doing that quick inventory, you will probably notice anything that has changed for you. If you've changed jobs, if you've received income from a new source, if you bought or sold a home, those kinds of things will become apparent to you as you look at your prior year tax return and help you gathering your documents. Gathering all of your documents together in one place just makes everything easier for everyone, whether that's an electronic format, some sort of a safe file sharing system that you have, or just a paper envelope. I don't usually like to get the shoe boxes. I prefer everything to be scanned and uploaded, but I will take paper documents. So having everything in one place just makes it so much easier. The note on here about estimated payments is primarily for people who do not have regular tax withholding. So if you have a job with an employer who pays you with regular paycheck and you get a W-2 form at the end of the year, it's quite likely that you have plenty of tax withholding taken out of your paychecks each month or each time you get paid. But if you are self-employed, or if you receive investment income, or if you're compensated with some kind of equity compensation, restricted stock units are pretty common, commonly under withheld for, you may have to actually make estimated quarterly tax payments. And there's a slide with those deadlines. In order to not have a tax, an underpayment penalty or an under withholding penalty. And those are due 4 times a year. So if you've made any estimated tax payments, you need to make sure you get credit for those. So make sure you keep track of any payments you've made to either the state of California or to the IRS. And then the general rule for keeping your tax records is 3 to 7 years. Some people like to hang on to them longer, particularly if they have complicated situations. But 3 years is the minimum amount of time that you want to hang on to all of your tax documents, just in case you were to get audited, or if you need to file an amended return and get a refund, you can do that for up to 3 years after you filed a return. So here are the important deadlines that I captured here. There are more, but April 15th is a day most of us know as the day that we have to have filed our taxes by. If for some reason, sometimes people haven't received all of their documents by that date, or things are just running behind, you can file for an automatic extension and wait until October 15th to actually file your tax return. But if you do ask for that extension, it does not extend your the requirement to pay the tax that's due. So sometimes you have to make a best guess, or you have to have a tax preparer who can help you figure out at least some amount that you need to pay to help you avoid a penalty. Because if you file an extension and you owe money, you will still have to pay that penalty. So here are those quarterly estimated payments. The first one is generally due on the tax filing deadline. So if you file your 2020 taxes on April 15th and you owe a quarterly payment, you have to make that payment on the same day. Many times what people do is, if they are going to receive a refund on their 2020 taxes, they just go ahead and let the IRS keep that as if it is their first quarterly payment for 2021. And then after that, there's payments due July, September, and then January of the following year. And then I put this deadline on here that April 15th is the last day that you can actually make a contribution to an individual retirement account. This is one of the few things that you can do that actually affects the prior year. So sometimes if you are eligible to receive a tax break by making an IRA contribution, and most tax software tools will tell you this, there's a way to check and see whether or not you're eligible and how much you would save by making this contribution. You actually have all the way up until the tax filing deadline to make that contribution. And if you have children who had a job, maybe a summer job, or young adults, you can actually help them by contributing to a retirement account for them. They would have to open the account, but some people to gift their children or their grandchildren with early retirement savings in this way. Here are some recent tax law changes. There are many. There have been several large and small changes to tax laws, and this is just 4 highlighted ones. One big change is for people who are retired and who have been planning to take a required distribution from a retirement account or 401k account. Those required distributions used to be had to start in the year that you turned 70 and a half, kind of a strange law. And recently that was changed. And so you can start taking those distributions when you're 72. For many people, this doesn't make any difference because they're already taking some kind of a distribution from those accounts, but the requirement age has changed. A special rule for 2020 because of COVID-19 is that there was no requirement to take a distribution. So if you did not take a distribution in 2020, you won't have to pay any tax on that non-distribution. Also for 2020, if you are someone who does not have enough tax write-offs or tax deductions to itemize your deductions if you are generally somebody who takes the standard deduction. This year, if you gave up to $300 to charity, and this is not like Goodwill donations, but it has to be either, you know, cash, check, credit card, some sort of a donation that you made to a charitable organization, you can take a deduction for up to $300 straight off of your tax return, even if you're taking the standard deduction. So that's something that got kind of slipped in there, and a lot of people aren't aware of it. And then a number of tax breaks that were set to expire or had expired, they got brought back in. So some college tuition deduction, a mortgage insurance premium deduction, mortgage debt forgiveness, and energy efficiency improvements, things like you know, better windows or solar. There were certain tax breaks that were set to expire, and they actually got extended. Some of these things were extended retroactively. So if any of those things are interesting to you, or you think they might apply to you, it is actually possible to go back and amend prior year tax returns and get those credits if they pertain to you. So those are some of the highlights that I thought might be interesting, not knowing who my audience is going to be here tonight. So here's just a special slide about the stimulus payment. So Congress, you know, issued payments to people at various income levels twice in 2020, and there's a new one in the works. It is not labeled stimulus money or COVID-19 relief, but if you for any reason did not receive this payment and you were eligible for it, and I know that this happened to some people because they had like closed the bank account that money was supposed to go into, or had a change of address, something like that, you can apply for these payments through your tax filing. And all of the various software tools should have a way to help you with that. The thing you want to look for is recovery rebate credit. And if you're getting somebody to help you with that, you might want to mention that you did not receive those payments if that's the case. And you qualify for these if you're a single filer with income up to $75,000 and married twice that amount. If you're filing as head of household, I think it's kind of in the middle. It's like 112,500 is the income cutoff. So one thing to think about is if you qualified for these payments in 2019, but you made more money in 2020, you may want to, and you're going to qualify for the for a new stimulus payment in 2020, it might play a role in whether or not you file sooner or later, waiting until April 15th, possibly, if you're wanting to get that last payment. And these payments are not taxable, so that's kind of nice. Although unemployment compensation is taxable. Okay, I think we're nearing the end of my slides and we can go to questions. Are there ways to save on your taxes next year? Yes, you can contribute to retirement accounts and that will lower your taxable income. If you are eligible for a health savings account or a flexible spending account for healthcare or childcare, those things can reduce your taxes. If you have self-employment income, there are various deductions like home office and other things that you can reduce your taxable income that way. If you have capital gains and you lost money, with capital losses, you can offset your gains with your losses. Sometimes employee stock options can offer an opportunity for tax savings, or you can be strategic with how you work with those. Charitable donations generally will reduce your taxable income if you itemize. In 2020, that $300 kind of bonus deduction came in, but I'm not sure if that'll happen for 2021 as well. If you had high medical expenses, you may be able to take a deduction for those, but it's usually a very high limit on that. And same with mortgage interest. If you have a mortgage, or if you bought a home and now you have a mortgage and you didn't before, that might give you an opportunity for some tax savings. And here are some resources, and this is something that maybe Tiffany can share even later. I know that this recording will be offered later, but this particular sheet just has a little information about some resources if you do need help actually preparing your taxes. The free tax help for low income individuals and families does operate all throughout the county and the state. And I did notice that the Hillview branch is offering this, but it has to be through an appointment. So the phone number is listed there. You can go on the internet and search for this branch or others around the county. Also, this taxaid.org or through the irs.gov website can lead you to some resources. So I think that's it. That is it.
Okay, thank you, Jennipher. Let me first mention a couple of things, and then I'm going to stop the recording to take questions. So let me just mention, I'm going to put in the link to the tax forms from the IRS, so right there in the chat. Also, we actually have a blog on virtual tax services from TaxAid. So let me go ahead and paste that link into the chat box as well too. We also have some other programs coming up on taxes too. So I just want to make sure people know about that. Unfortunately, today and possibly tomorrow, our registration website is not working right now, but it should be up. I'm hoping. I'm crossing my fingers by Thursday. So we'll see. I'm going to go ahead and stop the recording. So give me just one moment. Thank you.